last night with Tesla. We've also got China production numbers for May and some reports on June targets. We've got more information on the new 4680 Texas-made vehicles, a NHTSA investigation escalation, and quite a few other items. It's a pretty jam-packed news day today. Interesting day in the markets as well, with Tesla finishing down 0.9% after being up almost 5% earlier in the day. So gotta love those 5% intraday swings. Of course, the NASDAQ fell off during the day as well. Ended up finishing down 2.75%. And then of course, Tesla closing at $719 on the day. So kind of the big news for today, we have kind of a few items that fall into that category, I would say. We'll start off with that all hands meeting from yesterday. So apparently Electrek obtained a recording of this, and throughout the day they've been sharing out snippets that they have found noteworthy from that recording. And we're going to start off with Elon talking about this quarter. Of course, we know that Tesla gets into these quarterly wave delivery cycles where they're delivering a lot of the quarterly production in the last few weeks of the quarter. And Elon was asked about that at the all hands meeting. And he responded saying this has been a challenge since late 2008, as long as Tesla's been delivering vehicles, pretty much, saying there always seems to be something that happens and causes the end of quarter to be nutty, and this quarter will not be an exception, mostly because we had this huge challenge with the COVID restrictions in Shanghai, basically shut down Shanghai factory for much of the early part of the quarter. It is only now getting back to full production. It will be pretty intense this quarter. So like I said, we'll talk about Shanghai production here in a second, but I did want to touch on one other part of this article that did seem to cause a little bit of confusion. At the end here, Electrek said that the CEO previously said that they will probably not break another delivery record because the production shuts down, but he hinted that Tesla could possibly still deliver close to 300,000 vehicles. So that seems to have caused some confusion, people thinking that maybe Electrek is saying that Elon said that they could still possibly deliver 300,000 vehicles at this meeting yesterday. But this is in the context of his previous comments from the Q1 earnings call. So probably could have been worded a little bit better there, but just wanted to make sure that that was clear, that Electrek was talking about previous comments, not comments from yesterday when referring to that 300,000 vehicle number. So hopefully that straightens that out. The other couple of comments that were interesting here, he was asked about Master Plan Part 3, and I think I was way off on this when we talked about how I thought this would be very AI focused because of the things he had been talking about leading up to announcing that he was working on Master Plan Part 3. But apparently when asked, he said that, quote, Master Plan Part 3 is all about achieving very large scale. In order to shift the entire energy infrastructure and transport infrastructure of Earth, there has to be a very high scale. We have to ask, what is the actual tonnage? If we work backward from, let's say, 300 terawatt hours of installed capacity in vehicles and stationary, then how do you achieve that tonnage from a mining and refining standpoint, but also do so in a sustainable way? End quote. And added that that is what Master Plan Part 3 is. How do you get enough scale to actually shift the entire energy infrastructure of Earth? So I'm sure there will be elements of AI woven into Master Plan Part 3, but it definitely sounds like it's a continuation of more of the type of things that we've heard Tesla talk about in Master Plan Part 1 and 2, relating to their core mission of accelerating the advent of sustainable energy. It sounds like it's really just how do they go all the way with that initial vision. And of course, Elon here mentioning mining, which we've talked quite a bit about, refining as well. Certainly from Drew's comments at that Stanford interview that we had mentioned 2 weeks ago, maybe, it seems like Tesla's definitely interested in getting into that mining space. So more to keep an eye on. We haven't really heard too much about the Master Plan Part 3 from Elon recently, but good to see a little bit more information on that here. A couple other quick ones here. Elon was asked about service. So he said that he thinks that they still have a relatively conventional approach to service. He mentioned using the vehicle app and definitely have better service than the rest of the industry, but really want Tesla to look at how we can revolutionize service and, I don't know, make it 10 times better than the rest of the industry. So that's kind of Elon's go-to refrain there. But clearly Elon has a little bit more focus since that tweet maybe a week ago on improving service. And sorry if there's... there might be some Nelly going on in the background. There's a boat going by that's playing some Nelly really loud. So sorry about that. Anyway, he also said that they definitely want to increase the number of people who are actually working on repairing cars. He said when looking at the headcount of service centers, the ratio of people fixing cars to people managing service doesn't really make a ton of sense. So clearly Tesla trying to make more of that management process happen within the app. And this also ties into the layoffs that we had talked about with Tesla reducing salaried employees, maybe people managing service centers, or involved in the management of service centers rather, and hiring more people that are actually doing the work on the cars. The other thing, so I guess two other things on the all hands, and then we'll move on. He was asked about Twitter, and he said, like, how should Tesla employees think about this? And is it a distraction? He said, well, ignore Twitter, ignore. So I know people might want me to do that. We can't quite do that, but we'll move on for now. Not really any other major Twitter news. The other thing that I have learned is that Elon was asked kind of like, what is next? And he said that finishing the robotaxi designs would be a high priority thing for what's next. So pretty interesting to hear that as well. All right, next up here, I think we've got the China numbers. So CPCA report came out today. I'm not going to dig through here to find the numbers, but Tesla reported production, or the CPCA reported Tesla's production rather, of about 33,500 vehicles. Oh, we're right there actually. 33,500 vehicles for the month, which actually only ended up being down 9% from last May, despite all of the production interruptions that Tesla's had to deal with throughout the month. We also hear, before we hop into Excel and just kind of analyze what this is going to mean for the quarter, we also got a report from Reuters today that said that they have seen, probably one of their internal memos that they seem to have unlimited access to, they have seen that Tesla's targeting production of more than 71,000 vehicles at Giga Shanghai for June. So that actually is pretty close to what we had kind of mapped out previously. And again, we'll go into that in a second. Just want to touch on two other really quick rumors from China. Not that I put a ton of weight in this, but Chris Zhang is reporting on Twitter that Giga Shanghai capacity could hit a new high in June. Supply chain source shows Tesla China has placed orders with all of its major suppliers well in excess of what was scheduled for June, such as a 130% order for ESP modules from Bosch. And then he also says that Tesla China disclosed today that Giga Shanghai capacity has been restored to 100%. So we kind of already knew they were getting really close to that. Makes sense. He also says that they're trying to speed up their delivery process from 2 hours to 20 minutes. As of course, where we started, it's going to be a pretty nutty end of the quarter with a lot of the production and therefore deliveries backloaded in these last couple of weeks. So again, I don't necessarily put a ton of stock. I do think Chris Zhang has reported some good info out of China before, but not a source that I've followed super closely. So with the CPCA numbers, I want to flip over to Excel here really quick and just kind of walk through how that's shaking out for the quarter. So let me flip over. First, we can just see the production numbers here in context of where we have been. So of course we know in April they produced just under 11,000. Now, as I mentioned, 33,500 for May. The sales numbers, so again, domestic sales, export, that adds up to what's called wholesale sales, were 32,165, with about 2/3 of those being export and about 10,000 or a third being retail sales. You can also see the split here for Model Y and Model 3 production is about 2/3 Model Y, 1/3 Model 3. So that should help with the average selling price as we look, into the financial results for Q2. So then let me flip over to our production tracking spreadsheet. Hopefully this won't mess anything up. Looks like that's okay. So first I want to just kind of zoom in on where we were before this, what we were kind of mapping out based on some of the rumors that we had heard. This had put May at around, 35,700 was the last forecast or scenario, I guess, rather, that we had walked through. And that was based on Tesla having hit that 2,500 per day production rate on around May 25th. That would have given them roughly 15,000 vehicles produced through the end of May, which would have put us around 35,000. So they didn't quite get to that. But then you can also see for June, previously Reuters reports had put June production at, I think, 15,200 per week. And now they're saying, target of 71,000. And we can go back to that article too, but they also said from June 13th, they're targeting weekly production of 17,000 vehicles per week, which would be obviously higher than what we've got in here. So you can see anyway, that was mapping out to like 262,000 vehicles produced for the quarter. If we flip over to kind of this updated scenario, I guess, with our known May quantities, I've just put the numbers in there for May. So we're at 33,500. Again, I just kind of have those broken up by the little different time periods that we have information on for May. And then if June does come in and it's at 71,000, that would put Q2 for Shanghai at 115,000. That would be, looks like, slightly up to last year, just because I believe there were some shutdowns going on. I can't remember exactly what was going on last year. I'd have to look back, but would actually have Shanghai up from last year, but still down pretty significantly, about 60,000 vehicles quarter over quarter, which that's just going to be too much of a stretch, I think, to make up from the combination of, Fremont, Texas, and Berlin. So if we assume some sequential increase here from Fremont, which looks like so far things have kind of been trending in that direction, so maybe 134,000 up from 125,000, and then maybe we're getting like 10 to 12,000 out of Berlin and Texas combined. I'm hoping this is a little bit low for Texas at 2,500 in here, now that we're starting to see these deliveries and Tesla seek out more buyers. But I think Berlin has kind of been trending a little bit slower than what we might have had earlier in the quarter. Anyway, all these things combining are, to me, shaking out somewhere around 260,000 for production. And again, that's production, so deliveries, those could vary pretty significantly. Anyway, for that 71,000 for June, you can see that would shake out to about 16,500 per week, which would again line up with the second half of Reuters report. Obviously, it's all from the same source, so it makes sense. But that's kind of how that's shaking out. That would lead to then a potentially higher production rate into, later in the quarter, or into Q3, I mean. So the other thing in here for May is that this is this 1,900 per day rate that we saw for sort of the last week for May. That would be 89% of the 2,500 per day production rate that we had heard that Tesla had hit, assuming that was operating for 6 days on a 7-day week. That would come out to 2,150 or so per day. So just wanted to point that out because we had that Reuters report that said Tesla was only at 70% of production, and it looks like they were quite a bit higher. So I think that was just sort of, cherry picking some numbers. So just kind of good to keep that in mind. All right, so the next thing we've got here, then let me just flip back and point out that report for Reuters. Let's see, just so we make sure we cover off on that. So what I mentioned here aims to produce 17,000 cars per week from June 13th. And then they also say that 2,600 units in May was, they were only able to do so at the end of the month. But of course, we know that happened a little bit earlier than actually the end of the month. So that's the situation in China. That's kind of how I'm seeing it shake out for Q2. And again, 260,000 production, could be a little bit lower on deliveries because Tesla is so low on inventory and production is going to be backloaded that inventory would probably grow. But I've said that a lot, I think the last couple of quarters, and Tesla has kind of defied that. So we'll see. All right, let's move on here. We've got more information today on the standard range Model Y coming out of Giga Texas, so the 4680 vehicles. Here we've got an update from Spoken Reviews, who we had talked about yesterday. And this person took it to a supercharger. They got it down to 9% and just kind of charged it all the way to full, up to 97%, which in total ended up taking about 50 minutes. But of course, that doesn't really mean a whole lot. We kind of want to look at how things are going along the charging curve. So we can see here, it's really small. You probably can't see on the screen, but when first plugging in, it looks like they were able to hit a peak rate of 224 kilowatts. I think it actually went slightly higher than that, but it's again kind of hard to see on screen. So maybe 227, I think I saw. For peak rate, this was on a V3 supercharger, which of course could hit 250 or 253-ish. So not quite getting up to that level, but again, this was at 9%. And then if we go a little bit further along in the charge, obviously you can see this one a little bit more clearly. At 22% state of charge, they were pulling 143 kilowatts, which would actually be quite a bit lower in terms of the power being drawn than what we have seen from, a 2170 nickel-based Model 3. So I've got that charge curve here. This is showing the power level, battery state of charge. So at about 22%, which is why I kind of stopped the video there, this would be where the Model 3 is currently, or at least, back in June. So could even be a little bit better than this, but this was kind of where the Model 3 started to taper off. And I would assume the Model Y similar. Couldn't find that one exactly, but around 22% seems to be when it tapers off. So we're seeing a much earlier taper here with these 4680s, at least initially. Obviously, this is going to be software controlled by Tesla. They're probably playing it pretty conservatively until they get a little bit more data from the fleet to be more confident in a more aggressive charge curve. We've seen Tesla alter those things over time, so it's not anything to be, ultra nitpicky about at this point in time, but it is a very interesting early data point to see it, starting to taper off much more significantly here. If we were to plot that out, we'd be somewhere down here in the charge curve, something like that. versus what we're seeing with some of the 2170 vehicles. So again, very early data points, but definitely interesting to see these initial charging results. Here you can see at 80%, they were getting 50 kilowatts. So again, if we come back here, that starts to get much closer to what we have seen from the Model 3, which, 50 kilowatts here, probably at 55, or I guess 60 that would be. So not a huge difference, but even still a little bit below on that curve. So I think I mentioned, I think it was about 34 minutes to get from 9% to 80% and 50 minutes to get from 9% to 97%. The other thing that was kind of interesting that came out today from Spoken Reviews, they were able to see on the mobile app that Tesla is actually labeling this as a 50D Model Y. So I wanted to talk about this because obviously we don't know the battery pack size in the Model Y, and we talked about some of the confusion on efficiency yesterday. We've seen Tesla historically mark cars like 75D, 100D in line with the battery capacity. If this Model Y had a 50 kilowatt hour battery, that would be very, very good news for Tesla, very bad news for everybody else. I don't think that is the case, though. This would suggest that Tesla's, the efficiency watt hours per mile would be quite a bit lower than, or the efficiency would be higher, the watt hours per mile would be quite a bit lower than what we're seeing on the EPA data or even in real world testing. The same Spoken Review video, it was showing his watt hour per mile at 70 miles per hour on the freeway at somewhere around 250 watt hours per mile. And then also his entire trip was like 290. If we're at a 50 kilowatt hour battery, and I'll just do some super quick math here. So 50 kilowatt hour battery, and now I forgot what I needed to do. Problems with live streams. Let's see. Yeah, divided by 279, I think. Is that right? So it'd have to be at like 179 watt hours per mile, I think, if I'm doing my on the fly math correctly there, to get 279 miles of range out of a 50 kilowatt hour pack, which again, quite a bit lower than the EPA rating and quite a bit lower than what we're actually seeing here in the real world drives. So even though that 50D would be very exciting, I don't think that that's an accurate reflection on the battery pack size. So more to come on that, I'm sure, as more people get these vehicles, and we'll see. All right, next we've got an update from NHTSA in terms of the preliminary evaluation that they had going on Tesla and Autopilot. Remember, this sort of started as, I don't know if repercussion is the right word, but sort of in response to accidents with Tesla vehicles and first responder vehicles on the side of highways. That was where NHTSA initially started looking into it. They've since broadened the scope, which I don't think a lot of people realize. And this is now really just a general autopilot investigation. So of course, this is on the entire Tesla fleet in the US that has these vehicles. And you can see that this has been upgraded from a preliminary evaluation to an engineering analysis. So we'll go through the details here, but just to give people context on what that means. They basically start out the investigation process, it starts off by looking into reports, and then once they kind of kick off the investigation process, that starts with the preliminary evaluation. If from the preliminary evaluation investigation, they conclude that additional information, testing, or analysis is needed, then the investigation gets escalated to an engineering analysis. So that's where we're at today. And then if based on the work done in either of those stages, if there is sufficient evidence to conclude that there's a defect related to vehicle safety, the manufacturer would be forced to issue a recall based on NHTSA's findings. So that's basically the process: preliminary evaluation, engineering analysis, potentially forced recall, and we're in engineering analysis right now. Oftentimes, though, as NHTSA points out, they'll just work with the manufacturer to, do a voluntary recall before actually forcing them to. So we'll try to go through this relatively quickly, but again, just want to make sure people understand the full context here. So they talk about the preliminary evaluation to assess the performance of Tesla's Autopilot system. Again, it doesn't specifically mention first response there, but it says that the investigation opening was motivated by an accumulation of crashes related to first responders. But then with this engineering analysis, they're saying that they're extending their, process on the existing crash analysis, to evaluate additional data sets, perform vehicle evaluations, and explore the degree to which autopilot and associated Tesla systems may exacerbate human factors or behavioral safety risks by undermining the effectiveness of the driver's supervision. So that's the big thing. They're not just looking at that scenario. They're saying, okay, is autopilot actually making people's inattentiveness worse in some circumstances? And is there anything that Tesla can do to make that better? So that's really what they're investigating at this stage. They've got a lot of details here on what their investigation has learned so far. They talk about the, I think there's like 18 crashes or something that they looked into. And in those crashes, they say that, they had forward collision warnings activated in the majority of incidents. Automatic emergency braking was in approximately half of those. And on average in those crashes, autopilot aborted vehicle control less than 1 second prior to first impact. I kind of wanted to highlight that because Tesla, when they report their autopilot crash statistics, that would count as an autopilot crash, even though it is aborted slightly prior to the crash. Tesla says that if that happens within 5 seconds, that's what they're counting as an autopilot crash. So we've seen Tesla's safety statistics there in terms of accidents per mile on autopilot, and they are quite strong. So even though we are seeing some crashes, it's just important to keep that in mind. Obviously, different data sets that you're working with, so nothing is directly comparable, but just something to keep in mind. So they also say that when they had video evidence of what was happening in these crashes, it was happening where the first responder scene would have been visible to a driver on average 8 seconds up to impact. So that's giving NHTSA the idea that drivers are just not really paying attention, which I think we can kind of all agree is the case. They talk about how they extended to review 191 crashes. They ended up removing maybe a third of those because of other factors, like the other vehicle was at fault or something like that. They looked at those remaining 106 crashes. Approximately half of those had indications that the driver was insufficiently responsive to the needs of the dynamic driving task, as evidenced by the drivers either not intervening or intervening through ineffectual control input. So basically they're just saying, okay, in these 191 crashes, we threw out 85. In half of the remaining crashes, there was a lack of driver intervening, presumably because of inattentiveness is what they're saying. So they're saying that although it's not exhaustive, the crash review identified patterns in system performance and associated driver behavior that enabled the agency to identify areas of engineering inquiry. So hence this engineering analysis to see if they can improve this. They note that under the driver engagement strategy alerts, they were presented only 2 of the drivers within, I'm getting myself mixed up here. Under the driver engagement strategy alerts were presented. Okay, so they're saying in these crashes, only 2 of them had a driver alert from the Tesla vehicle within 5 minutes of the crash. So again, just supporting their theory that the driver's inattentive and Tesla is not alerting them enough because of this data here. And then they say that, and this is kind of the last thing I have highlighted on here, they say that even though this might be a result of a driver not using the feature as Tesla intends or as Tesla warns them to, they say that misuse does not necessarily preclude a system defect. So basically, Tesla, you can say what you want, but at the same time, if drivers are using this in an inattentive manner and you can do something about it, then you should do something about it. So I think what we're going to see here as a result of this is NHTSA strongly pushing Tesla to do more things with eye tracking, which we've already seen Tesla do with the FSD beta. Of course, we have seen Tesla implement changes for specific first response vehicles on the side of the road, where Tesla's starting to slow down for those vehicles on autopilot. But again, this isn't just covering only that instance. So based on my read through of this, I think NHTSA is going to be a little bit stricter here and try to force Tesla to do more eye tracking, more warnings, more forcing drivers to be attentive when using autopilot. So I think that's fine. Hopefully it just doesn't limit the functionality of the system. And I don't think that's really what NHTSA's intent here seems to be when they're talking about what they're evaluating. But I guess that risk is still out there to an extent. So I think that's it for the NHTSA stuff. Sorry, that was like a little bit lengthy. I know it probably could have been a little bit more succinct, but next up, we've got an upgrade from UBS on Tesla stock. So they have increased their rating on Tesla from neutral to buy. They have not changed their price target, so it was sitting at 1100 before. They have kept it at 1100, even though we tend to see a lot of analysts just lower it down to what the stock is currently trading at. They have actually lowered their earnings expectations for this year. You can see here by quarter kind of what they're expecting. I believe that, yeah, these are GAAP numbers. So for the year now, they're expecting GAAP earnings of $10 per share, so down 11% from what they had previously expected. But they are still increasing their price, or still keeping their buy rating, because for 2023 and 2024, they've increased their estimates by 6 and 27% respectively. We won't go through the whole note here. That would take quite a bit of time. I think this is like a 31-page note, but they're basically saying that as Shanghai continues to ramp, that should be strong in terms of Tesla's deliveries, and they do expect margins to continue to grow. They pointed out here, this is kind of the one thing that I want to make sure to share. They pointed out here that their expectation for the increase in COGS, so cost of goods sold, based on commodity prices, this is kind of what they're thinking. Since 2020, they expect that to have increased by like $3,800. But of course, as we've talked about at length, Tesla has increased prices on the Model 3 and the Model Y by $10,000 to $15,000. So it should more than offset what they expect the increases in commodity prices to be. So obviously, big firms like this, they've got hopefully a little bit more insight into what those commodity prices are doing and how that's affecting the price of the vehicle or the cost of the vehicle. So I just wanted to pass that particular part along, which I found to be pretty interesting. And as I've been talking about, I tend to agree with that line of thought. All right, next up here, we've got kind of an interesting report here as we head into the CPI report tomorrow. This is from KBB and Cox Automotive. So they are looking at average selling prices for new vehicles month over month, as they tend to do. They did actually give us quite a bit of detail in this report, though. So we'll look at the Tesla numbers here in a second. Let me zoom in a bit. But they are saying that for May, prices increased for new vehicles in total in the US 1% month over month. And for Tesla, they did fall slightly month over month, but are up 13% year over year. So that might give us some good context for, again, when we start looking at the Q2 earnings results or forecasts. We're seeing, huge average selling price increases here year over year, though. Even with that, Tesla is still sitting at about average for the industry. So not a huge outlier, but again, Tesla's cost control is likely quite a bit better than what we're seeing in the industry. So I think that's an interesting data point. And as I mentioned with the CPI report tomorrow, it's kind of, I thought, hey, let's look back and see what these were in April. So this is a different data source, obviously. KBB's data could be different from how the CPI is looking at it, but CPI noted a 1.1% increase in April from March month over month. So we'd be seeing, a relatively similar increase here. Doesn't necessarily reflect on how total CPI is going to come in, but, found that to be pretty comparable to the last month. So again, that'll come out tomorrow morning, the CPI data, and obviously that's going to have a huge impact on the market, as we've talked about. All right, next up here, we've got I know we're getting long on time here, but we do have just a couple of other quick news items. So the Driven here is reporting that Tesla has now started to ship some vehicles, some Model Y vehicles, into Australia, which to the best of my knowledge is the first time that we have seen Model Ys in Australia, which now that I'm saying that, it seems like it's been a long time, but I suppose it's definitely possible. So definitely exciting to see that for Australia. Now we've got a lot of listeners there. Then we've also got news on Switzerland, a little bit less exciting. So Switzerland, they have I believe 70,000 krona electric vehicle incentive. And they have announced that as of July 8th, they will be capping that incentive for vehicles that cost over 700,000 krona, which would be roughly equivalent to 70,000 US dollars. So unfortunately, that would affect the Model Y, I think, in most, if not every case. So unfortunate news there, but obviously shouldn't be a huge impact to Tesla, though they may want to reprioritize some of their deliveries to make sure that customers can take advantage of that if possible. It's probably going to be tough, though, because, they really don't have much German production yet. And, of course, Shanghai can't really export at this point in the quarter and still have deliveries happen this quarter. All right, last couple of updates here. So this is just a follow-up on the so-called gigapress that we had talked about yesterday, making its way to Berlin. Turns out this is actually a stamping press. So the gigapress is a casting machine, not a press. And the machine that we're looking at here, this is a stamping machine, a stamping press. So just wanted to point that out. Not a gigapress, not another gigapress going to Giga Berlin, but a stamping press instead. And then we also got an update here. This will be the last item on the, electric vehicle charging network, which, there's about $5 billion in funding for under the infrastructure plan, or the infrastructure law, I guess now. We won't go through the details here because this is like an 80-page document. So you can feel free to check that out if you want. But one thing that just kind of, I guess, was notable in here that irked me a little bit. So White House says, thanks to President Biden's bold vision, leadership, and actions, EV sales have doubled since he took office. So it just kind of reminded me of the whole Mary-led incident. Obviously, Tesla would be responsible for the majority of the EV sales growth in the last 2 years. So again, no credit being given, credit being distributed elsewhere. Just, sad to see. All right, but that, not to leave it on a sad note, but that will wrap it up for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Friday, June 10th episode of Tesla Daily. Thank you.